contributing their equitable share of taxes.
The Finance Bill 2026 has proposed reintroduction of a withholding tax on the sale of scrap metals at the rate of 1.5% for both locally sourced and imported scrap. This provision has been welcomed by scrap metal dealers, noting that it creates a level playing field for local dealers. This is despite critics pushing back that taxing small-scale scrap metal traders at withholding tax rate is inconsistent with the national tax policy exclusion of the subsistence level economic activity. Esidana reports.
Scrap metal dealers will be required to part with a 1.5% withholding tax from gross sales starting July 2026 if the finance bill is passed in its current form. The proposal targets both local and imported scrap materials. Scrap dealers say that the bill is an advantage to the scrap metal sector and broadens the tax base for the exchequer by reducing incentives for informal trading.
Everybody from commercially, from the collector all the way to the dealer will be able to remit their taxes on turnover vis-a-vis the VAT tax, which is a bit precarious. And therefore, we support the proposed VAT exemption in totality and the introduction of 1.5% turnover tax.
While the deal offers a flat rate of 1.5% withholding for resident and non-resident persons, local dealers now want importers to be taxed double VAT, noting that imports dilute the market with materials that already exist in the country.
What we are doing is to try to protect the provision of raw material to ensure that this industry grows. We cannot fight for them, because they are the ones who set their prices and they are the ones who set, their production.
While manufacturers want the provision to tax turnover on imports deleted, dealers have differed, noting that manufacturers have been laying VAT on scrap dealers, hence the pushback.
You cannot expect somebody selling 100 kilos of scrap and somebody manufacturing hundreds of thousands of taps and putting them in the same bracket. We have to distinguish. This low person can be taxed on what he's selling, on what his turnover is. But these are the people, because there's a manufacturing process, and they are the ones who are responsible for the consumer, not the scrap dealers.
The Kenya Human Rights Commission has proposed that the proposal be revised to adopt a minimum threshold of 50,000 shillings per transaction before withholding tax applies to exempt subsistence waste pickers. The proposal marks the third major change to scrap metal taxation in 3 years, with manufacturers warning that frequent policy shifts are undermining predictability in the sector. The Kenya Association of Manufacturers has proposed the removal of the tax on imported scrap metals, warning that the levy will raise manufacturing costs and deter investments. Esther Diana, KTN, Nairobi.